I think generally market perception is that exporters, like rubber glove industries, will benefit from weakening on ringgit or stronger US dollars, but it's not necessarily true. You have the short-term gain on foreign exchange, especially those you gain from the account receivables. But going forward, your price of product based on current exchange rate. So you actually going forward, will not benefit from gain of foreign exchange because you price your product based on lower currency anyway. So the importers are also very savvy. They will squeeze the price. In fact, typically the industry revise price every month, but now we are revising more than once a month. So there will be more frequencies of revising prices based on lower exchange rates. So in reality, going forward, we may not gain from foreign exchange, but we benefit from competitiveness because ringgit is the weakest ringgit in ASEAN currencies.
So in recent quarters, those average selling prices for the rubber industry have been coming down, so that will continue.
That's right. Yeah, so the price will continue to go down, selling price continue to go down, and especially the bigger you are, the higher capacity you are, especially on all those OEM manufacturers, they would have higher pressure on price margin compressions because their customers are buying from various sources, and actually big supplier, they are selling to the same customer. The customer will demand lower price. So they have higher pressure. So going forward, you are going to see selling price are trending down.
And how are you buffering against margin compression?
We have to remain competitive. We have to follow FOB. We have to price our product based on current exchange rate. But advantage for Supermax is that we do distributions. Today, if you look at the entire supply chain, who benefit the most as a result of volatile foreign exchange is the American importer and British importer because their currency are the strongest. So having Supermax in United States and UK, our two overseas subsidiaries will benefit more. So generally speaking, the major markets are heading for recessions except two markets, United States and Britain. These two markets will continue to remain strong because their currency has been the strongest among the rest of currencies.
Now you've been planning to bring on more production capacity online with 2 plants in the works. When do you anticipate switching those on?
Our plant 10 and 11 has been delayed due to infrastructure delay, especially water supply and electricity supply. We have been able to resolve most of it except water. Now, I think by first quarter, all the production line will be fully commissioned. So effectively, you are going to see full impact second quarter next year, where all the numbers will be shown based on our additional output come from these 2 plants.
So you're getting into the contact lens business, initially planning to launch it in the 3rd quarter of this year. What progress is being had on that front?
Progress is still on schedule. The engineering side has been bumping up. So we should be launching officially our product globally on this product is sometimes in November. So we are not only manufacturing contact lens in Malaysia, but we are looking into UK high-tech industries to produce our high-tech contact lens as well. So we need to recruit a lot of engineers. But however, you can see that a lot of engineers could also be recruited from UK. So we are pretty excited. That more exciting than glove. Glove is the old industries. It's price war everywhere. So competition everywhere. But contact lenses is more exciting.
So what other plans do you have in the works then?
We just started. We incorporated a Supermax Hong Kong office. That will be another milestone for where we will be more focused toward China market, based by spearheading. Supermax Hong Kong office will spearhead for the China market in terms of glove distribution as well as contact lens business. So Hong Kong office will be our primary move. We would be moving most of our major activities, corporate activities as well, to Hong Kong.
How concerned are you about the signs of moderating growth in China, given the strategy that you've just planned there?
Their export growth will probably reduce a little bit, but the local consumption, the domestic consumption still remain high because I think their middle class are growing higher and higher. In fact, in terms of number, they are higher than the United States. So I have no concern about the slowdown of economy in China, because the sheer size, the purchasing power, and the size of population is just could not be ignored for entering to that market. So, but of course, we will enter and manage that market very cautiously.